What's going on, guys? Good evening, and welcome to another episode of Full Transparency Trading, where I'm your host, Sebastian. And today we're going to discuss a few things that I use to be pretty successful with my trading. And one of them is simple machine learning. What is machine learning? I'll actually go get you the definition real quick. Go over to the Google machine. Watch this. What is machine learning?
Here's the definition of machine learning: the use and development of computer systems that are able to learn and adapt without following explicit instructions, by using algorithms and statistical models to analyze and draw inferences from patterns in data.
And I'll take that and I'll simplify that as to how that applies to my day trading and why trading like a machine is very important. I know you guys come over here and you see these boxes and stuff and these lines, and you're like, what the hell is on his screen? And all it is like it's my own very super simplified algorithm. Okay, I use pattern recognition and simple sequence recognition to execute my trades. So let's say all day long something similar is happening. So let's put a line right here. That's where all these horizontal lines come from. And all day long we're reacting off of this line, this purple line, and this purple line down here, right? For a whole day. So I already see the pattern. Now, based on the time of day, is going to tell me how much of that pattern is going to be executed. So we're in what's called the Asian session now. It started right here at 6 o'clock. The top portion of this pattern to right here was executed from 6 o'clock until 6:31, right? 6:31, the bottom portion of this pattern started to be executed. So you gotta wait for it to come down to this level here where it's equal with this, the body of this candle. I won't put a blue line, I'll just put a little alert there. And then take it from that point. Break out, start consolidating, come right back down to basically that line there, the bodies of these candles. So when I start recognizing that that's happening a lot, and as you can see, it just happened again a second ago, that's what that beep was. Now we're reacting off of this purple line. So I'm just taking this simple set of data that I'm gathering throughout the day, and I'm going, based off of where we are right now, once we get above this blue line, we're going to go to the next blue line. If we break that blue line, we're going to go halfway before we pull back. If we don't come back through this blue line, we're going to go all the way up to this purple line. Okay? If we break through this purple line, we're going to reach for this. If we don't reach it, we're going to fall heavily. And I'm going to show you how the same thing happened down here. So these lines are drawn on the 4-hour time frame. I was just looking at the 30-second time frame just now. So I trade every single time frame. This is what it looks like once I've gone through and I've plotted out every single scenario that happens in the market structure. This is the overall market structure from here all the way down to here. When is the last time we saw the full overall market structure? It was November 5th. November 5th was the start of this run up to this historic high that kept us in this higher area up here, right? Once we broke this level, I immediately knew that we were reaching for this down here. This is my supply zone. This is my demand zone 0. Demand zone 0 is the main demand zone. Once we violate that, we're going much, much lower, and that's when the market has gone critical, right? In reality, what happened was we hit the 200 EMA on the daily, broke the 200 EMA on the daily, and this is the market structure, this box right here. We're still within the level of market structure from November 5th or November 4th, 2024. As long as we maintain above this white line right here, we will stay within this level of market structure. Let's go to the daily. We're reaching for the daily 200 EMA, which is right at the bottom of my purple box here, or $569 thereabout. I'd say 570 to 569. I could honestly slide this little box down ever so slightly to cover up that candle wick, and then it'll make a lot more sense. So let's just do that. Now you can see this is the full market structure right here. The full market structure started on October 31st, 2024. Pushed all the way up here, and now we're coming back. Whenever you have a historic run, just massive runs, just like this right here, massive runs, you're going to have a correction to fill this spot in before you can start to go up higher. So then you'll have a correction, you'll push back up to the high, pull back a little bit, push back up higher, and that is how these corrections work. You'd form like a weekly double top type of a situation, right? And that's what sent us down. Once we reach the bottom of this box, we'll have an opportunity to go higher unless the market decides to actually crash out. Then we're coming all the way down here to 538, and that's one heck of a drop. But when you think about it, historically, we have run the tables. We started off 2023 running up at $411. We are $200 higher historically since then. No run, actually this one might be thereabout, about 250. So only a single run from 2020 until 2022 was comparable, but we did it in 1 year, and now we're heading into the second year right now. In reality, it was October to where is it? It was October to create the all-time high, and then this year to create the new all-time high. But we did all that running over the course of 1 year, and in this new year, we're finally breaking out and we're forming a top. So we're gonna pull on down, and we could pull all the way towards the weekly. It's a little bit too far, but the daily is significantly closer and more than likely to be hit. So like I said, all I'm doing is very, very simple pattern recognition. When I reset that, it becomes a lot cleaner. When I go over to NQ, even more so. And this is what I'm trading. This box, we go up to this blue line. I'm looking for, I literally put my trade here and don't even worry about it. I put my trade there, it triggers the trade, we get a massive reaction. So how did I read from there, right? Well, from there, I'm like, okay, at the very least, minimum, we're getting this candle. We're gonna take this candle back. Once we break this candle, we know that we're in a free fall, and oh my gosh, you're gonna make so much money. So now I'm targeting my temporary demand zone. Once we break the demand zone, and zoom in some, and we come back up into the demand zone, if we don't instantly go back up through this candle, I know we're going down further. So we go back through the demand zone with a wick, push down even further. Now we're kind of a no man's land, so we're gonna just keep pulling up to here for a few minutes, and then that's gonna send us down to where? The 200 EMA on the 5-minute time frame, which is right here. Once we go below the 200 EMA, we're looking for this line and this line. After that, we start looking for this down here. Now, because this fall was so severe and so dramatic at 325, we know we're not going to get the full push down. So we start looking to the right, start looking to the right, start looking to the right, and we go to Wednesday. So now Wednesday hasn't allowed us to get back up to this high. Remember, we were all the way up there. Wednesday hasn't allowed us to do so until 2 o'clock in the afternoon. We finally hit that high. We gonna hit that high. Guess what happens after we hit that high? We fall right back down to this zone here. The exact same thing we did here, except not as severe, because this was a massive, massive, massive run up from all the way down here at this blue line to that, and this is a slightly smaller run up. So your reaction, because it's kind of just consolidating there for a long time, isn't going to be as severe, but you're still going to get the same type of reaction where you can get a full candle before you get a massive reversal going the other way. And if I was to punch in a trade, this is NQ, just one contract at this blue line here. I have 5 up right there because I was doing something aggressive at the end of the day that I didn't get to actually do. But I put one contract, and in that one contract, let's say I do 294 ticks. We're gonna go 300 ticks, 300, and I'm risking, let's say 150. We'd be way up here beyond the high before I ever get wicked out. But look at what we made it to. We for sure made it to $1,500 on one contract just from leaving a trade at this line. So that's what I'm doing, is I'm using very simple machine learning or pattern recognition in order to execute super duper simple trades based off of patterns that have been forming and happening again and again and again. So then we go from here, we go back up into there, we come down to this blue line. Guess what? We go back up into there again. Guess where I'm targeting again? I'm targeting this blue line. Takes a little bit longer this time. You get a bit more of a pullback, so I get kicked out when we get back to this one. But it does get down to that blue line again. Then we go to the purple line, come back down to this blue line, go to the purple line, come back down to this blue line, go to the purple line again, come back down to that blue line. Super simple pattern recognition. What am I not doing? I'm not trading this stuff. I'm not trading this stuff. I'm not trading this stuff. So I'm missing out on a ton of money, right? To stay safe. I only want things that are going to react certain ways. I may not know how long it's going to take. I may not know if it's going to work out perfectly. But what I do know is that if I wait at the top of this purple box, eventually we will hit the top of this purple box again, and I'll get me a nice little trade to the downside, to at the very least this 200 EMA. And majority of the time, what you see me do when I leave my trade up there is I only take what's reasonable, right? So I'm having a very, very reasonable take profit at this blue line right here, or the 200 EMA. But in my case, this blue line. So one contract hits the top of that, triggers me in. I'm risking $300, and it doesn't get all the way back up here. But then I know this: if we get all the way back up to the top of that candle, then I lose the trade. And that's perfectly okay. But guess what? If we don't get to the top of that candle, I don't lose the trade, and I make my $825, and then I move on with my life. Now I wait for us to break this blue line, and once we break the blue line and the 200 EMA, then at the 200 EMA, underneath this support area, which will become resistance, now I take that trade to the downside. I'm not allowing myself to get chewed up like bubblegum in here. I'm not allowing myself to get chewed up like bubblegum in here. That's what loses so much money, trying to take every trade. I'm just waiting. I'm waiting. And when it looks bad like this, I waited and 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 waited all night long. I didn't do none of this. I didn't get to trade any of this action right here, right? Because I wanted to see what was happening in the market. Get up to this high, start waiting, take that one right there, get 825 to start my day, move on into the 930, okay? 930, we're right here. 930 is chewing people up like bubblegum. I don't like it. What am I waiting for? To get back to this 200 EMA, to get back to this resistance area here. So we put an alert there like this, and then we just wait. The alert goes off, I queue up my PC, and I'm like, all right, if we don't break the 200 EMA, we'll get in at the blue line down here while it's coming back down. It starts falling back down, lock in, boom, get into a trade right here. So I set up my trade right on the blue line. Always for me, you'll notice it's usually on the blue line unless I market enter. And then what am I targeting? My first target is this blue line. That's one contract for $7.95. But guess what happens when it hits that blue line? It wicks through, and I get $1,000. Starts to pull back. All I get is $1,000, but I got $1,000. You feel me? So basic machine learning. I don't want this video to be too long. Being patient and waiting for the play to come to you instead of you chasing the play. Chasing the play is going to kick your ass all over the stock market every single day. Wait for it to get to a very specific point where something is most likely to happen, and use machine learning to your advantage, because at the same time, this is what the stock market is. It's a machine learning the flow of the money as the market goes along. All of these wicks that we see are human manipulations, but the candles, the bodies of the candles, mechanical. Perfect. How can we make perfect bodies of the candle at the exact same spot every time if it's us? We're doing this mess right here for sure, but we're not doing this perfect top right here, perfect top right there, perfect bottom right here. We're doing this mess. Back to the machine, and then the day just kind of plays out. I hope that was an enjoyable video for you guys. If you have any questions, this is pretty much all I know. You know, I've, for the most part, taught you guys everything that I really know. I mean, about market structure and about trading and how I do it. So just apply whatever pieces of it you like. You don't have to trade exactly like me. Just apply the stuff that you find that you like, and then hopefully it can make you profitable as a trader. But this is how I make my money on a daily basis, using simple machine learning techniques and simple pattern recognition. I don't have all of the fancy technical knowledge and skills, but I can recognize a pattern. I am a video game player, so I recognize patterns and I execute the patterns every single time in games. I do the exact same thing in the stock market. This is just a video game that makes me a lot of money. You guys have a great night. Thank you so much for checking out the video, and I'll catch you in the next one. This has been another Full Transparency trading session. You guys know the motto: take the easy money. Why work super duper duper hard and get your ass kicked by the stock market and take losses and blow accounts and stuff like that, when you can just be like, hey, right here I'm probably gonna get like $300, $400, $500. I'll take that. Right here I'm probably gonna get a little jump that'll give me like $200, $300, $400. I'll take that, and then move on with your day. Have a great night.